Thank you, Scott. It's great to hear, actually, on that poll you just did, that most of the people in the room tonight have the premium functionality of AI, and most importantly, price alerts. Because as usual, we are going to set some price alerts and share those, and use the collaborative feature that we can share my homework with. So as long as you have the functionality, which it sounds like most of you do, that's great. We'll definitely get something out of this evening, because at the end I'll be able to copy out the cloud link for some of the, or all of the price alerts we're going to set. So without much more fanfare, let's take a look here at our lovely disclaimer page. Same disclaimer as every week in every webinar. Just reminding you all that we are content publishers, and this is an educational service, an educational webinar this evening. Nothing that you hear this evening should be construed as investment advice. If you're looking for investment advice, you need to contact your RIA or your broker. They are more suitable to give you official investment advice. But for us, we're just going to have fun and talk about some concepts of trading, and hopefully open your eyes to a few things and try and make this whole thing a lot simpler. And a quick slide just to remind you guys all, we take tremendous pride in onboarding our new customers, and our new clients are growing exponentially. I mean, Jamie and I can barely keep up with the requests we're getting lately for the 1 hour of power, meaning if you do sign up to Trade Ideas, you can register for a 1 hour session with myself or Jamie and share our desktop, and we can get you going in the right direction and help cater to you for a foundation for you to employ whatever it is that works best for you, time frames, different types of settings, different type of trading strategies. It's a great way to just kind of get you going. And then, of course, we leave our email open, an open door policy ongoing for you guys down the road if you have additional questions or comments. So in addition to the onboarding of the 1 hour of power, you can see, of course, the daily trading room here with Barry Anderson, and 162 people. We need to double that, because this slide is probably 3 or 4 months old. We have just been getting the word out in droves, and every day this number seems to grow. So I think we had over 335 people in the room today watching Barry talk the talk and walk the walk using our wonderful program here. Of course, we have the office hours Mondays and Thursdays with myself and Jamie, going over some issues of the day and trying to create some content for you guys, and open the floor to questions and answers. The QA demo was done today by Mr. Merkin and Brad, and then the evenings, here we are for the trade of the week. So we've got a lot of ongoing educational and webinar content to help onboard you guys and be a valet, because we recognize this is a very powerful program. That's the number one feedback we get. It's a very powerful program you got there, but we recognize sometimes it's nice to try and simplify it down a little bit to make it easier. The agenda tonight, much more of the same. We'll do a market recap. I do have a theme for this evening, which we'll continue to rehash on. We'll go through a light day for Holly's trades today and talk a little bit about the AI and how to use it. And then, of course, the trade of the week recap, how it was selected and where it might be going from here. Talk a little bit about sectors. I don't know if enough of you are taking advantage of some of the sector tools we have, and I'll demonstrate that as well. And then, of course, we'll go through and set some alerts in real time, and, of course, share at the end. So you guys can watch over my shoulder as I try and do some of my homework here in front of you all, and create some hopefully some good triggers. Okay, today's theme. Change is the only constant. We've got Mr. Charles Darwin here reminding us through his research that it's not the strongest of the species that survive, nor the most intelligent. It is the one that is the most adaptable to change. And, I've heard Jamie put it in a great way. Whatever works, you can always count on it at some point not working. So we have to be prepared for that. And one of the reasons a lot of traders run into trouble and difficulty and hit the wall is they find something that's working really well, and then they stay with that, and then it stops working, but they stay with it. Even though it stops working, they stay with it. It's like, watching the birds outside of a McDonald's or a Jack in the Box. They always know which trash can is loaded up with French fries. Well, if that trash can is not loaded up with French fries anymore, they will probably go to another trash can. But us humans seem to have a different way of doing it. There's a great book out there that I recommend. It's called Who Moved My Cheese? and it's a great, small, quick read, a 90-minute read. It's a parable about two pairs of mice, and these two mice are getting real fat on this one area of the maze that always has the cheese. But then one day the cheese is no longer there, and they have an internal struggle over what to do. One mouse wants to stay there and continue to wait for the cheese, and the other one says, I'm starving. I got to go out and find the cheese because the winds have changed and I'm not going to stick around. So it's a great parable. I highly recommend Hey, Who Moved My Cheese to talk about, change being the only constant. And if you're going to survive as a trader, Jamie and I have probably been through 100 or so changes in the winds, only to see 1 week all the junk stocks under 5 in a certain sector are moving, and it's like shooting fish in a barrel, but all of a sudden it just stops. And the people that can recognize that stopped sooner are the ones survive versus the ones that keep beating their head against the same rock. Like Einstein said, definition of insanity is doing the same thing over and over, getting the same result, but expecting a different result. That gets old and painful after a while. So I feel like there may be some winds of change in the market, and we'll look at the spiders here in a second. Matter of fact, let's just go ahead and do that now, and I'll bring up those remainder of those slides later. I've got my charts in white as requested. Easier to view with some of the contrast. So here again is our daily spiders chart, and I still have that trend line in that I've been drawing for weeks on end now, and reminded you guys last week that we did pierce that trend line just briefly, ever so briefly, intraday. If I zoom in on it, you can see it was about 1 day's worth, and then a quick reversal, and then pulling back below that level of supply. We pulled back, filled this gap here, dug in. We talked on Monday, Jamie and I, about, well, we could be building a new base camp here to go back and assault this level of supply again, or not. We just don't know, because we're in this no man's land between this level of buyers holding up the market and support here and this level of supply and people selling, the sellers showing up here. Today was interesting. Big red candle closing absolutely on lows, giving back everything that was made yesterday and a little bit more. If, and it's a big if in question marks in capital IF, if this level right here, 208.50-ish, turns out to be a near-term high and we continue to bleed back lower, well then we're starting to look at the possibility of maybe a near-term head and shoulders, this being the left shoulder, this being the head, and this being the right shoulder. Again, it's still too early to tell. I'm not in the business of predicting what we're going to do. I'm just in the business of recognizing what the footprints in the sand of the herd is telling us. And the herd is telling us here that we are in between these two levels of support and resistance, and we can go either way. So, levels to watch here, I think, of importance are going to be the low of this candle, which is 203.88, and then the high of this candle, obviously going back to 1092. So, we have about a 7-point range here. But again, if we can't take out this high of yesterday in this candle, this could be shaping up to be kind of a head and shoulders pattern. So, this is what we're up against. I've been warning against this level of supply for a couple months now, and we hit it, and here we are. Whether or not we can pull back and gather enough steam to make another assault up to it will be interesting to watch, but if we can't, keep an eye on these levels down here for support. So, all right, that should do it for the what's happening in the market recap. Let me just bring back my slide and move on a little bit here. We're going to talk about the artificial intelligence going forward. And just a reminder, I've taken a snapshot here from, I forgot the name of this movie, but it's where the MIT students all get on the chalkboard and figure out a way to count cards and beat the system. Unfortunately, the casinos kicked them out of the casino when they figured out these guys were counting cards, but the market will not kick us out. And AI Holly is basically counting cards every evening and going through finding these statistical probabilities as to when to hold on and not risk anything, and then when to reach out and risk something, based on a bunch of numbers and quantitative analysis that goes on every evening. We are just in the observation seat when we watch Holly, which leads me, I want to go forward a slide, which leads me to this. This is our friend Zach Galifianakis back in the great movie, The Hangover. And for those of you that don't remember, they got a wild idea to tap into his very visual brain, and he decided he could go go in and be like a Rain Man and sit down at the blackjack table. If you remember the scene, everybody's sitting around him watching him play, watching the expert. And that really is, in a sense, in what we're doing every single day with Holly. You know, I've used the professional golfer analogy. When you've got a professional golfer in your foursome, kind of elevates your game a little bit. You're watching how he approaches the game and how he makes his decisions. Well, we're doing the same thing every day at the blackjack table, sitting down watching Zach Galifianakis count cards, except we're not getting kicked out of the market or the casino for doing so. So going back to the performance here real quick, just an update. We hit like all-time highs last week on Friday. Had a little bit of a drawdown on Monday and got a lot of that back yesterday. And today has not been updated yet, but we will talk a little bit about today. But what's this showing us? You know, it's showing us in the whole that in the long run, the casino has the odds and the casino is winning. You know, maybe there was a big drawdown here. It happens. You know, maybe this was a big whale that flew in from Japan and beat the hell out of the casino for baccarat for a couple million. But hey, the casino always seems to find a way to fight back because over time the statistical odds are going to be in the favor of the trades that Holly's taking. And we're just pleased as heck to see this chart proving that fact compared to the S&P. So with that said, let's go ahead and take a look at Holly's recap today. And there was not a whole lot going on in Holly's recap, which in itself many times can be a tell. I think we have 11, 1, 2, 3, 4, 5, 6, 7, 8, 9, 11 trades is very much on the light side of the paradigm for Holly. You know, 5, 6, 7 trades is very unusual. We've seen it, but anything around the 10 level, 10 trades total for the day is pretty light. You know, sometimes she'll get into about maybe 40 trades on the heavier side. So even the AI is not seeing a whole lot of statistical options right now. And today there was a give back a little bit of about $1.66. Looking at the directionals, we took some shorts. She took some longs. Not too many trade arounds to talk about, but let's go in at that because again, the non-exit profit is something that not enough people are definitely focusing on. We have to remember that Holly is not the golden goose. You know, there are going to be days where she doesn't win, including today's. But again, that's why I showed you that graph. In the long run, the casino is going to win because the odds are stacked in the casino's favor. And that's how we see Holly every day. She lines up her starting lineup with different strategies that were tested prior to the evening, knowing that these strategies are coming into the day with a hot hand. And so these types of percentages here are basically, you know, what the casino has. The casino does not have a 50% win. You know, they have the odds stacked in their favor. I don't know what the actual numbers would be, but it's probably something along 55 or 60%. So in the long run, the casino's going to win. And in the long run, Holly's going to win. It's just a matter of pulling out and extracting the cues that she's giving us each and every day. So we can sort our closed trade column by the profit, and we can also sort by non-exit profit. But I'm going to go ahead and sort it on profit here, and I'm going to notice a few things. There's a couple of interesting trade arounds, and last week you may have remembered me talking. There's only 3 reasons Holly will get out of a trade. One is because she has to. At the end of each day, she's got to be flat. So some trades are set for 30 minutes or 60 minutes or even 5 hours or the entire day. It just doesn't matter. But when Holly's getting out of a trade because the time stop is there, that doesn't always necessarily mean that you have to. The second one is a stop hit. Well, this is a level that Holly has identified using the smart stop, which is an algorithm used on each different particular stock has different ranges of volatility. So our smart stops are going to be different for every stop. Now, it's my recommendation that when Holly hits a stop hit, that needs to be taken seriously because let's just take a look here. Stop hit. 56 cents was our loss, but it went down $1.91, so we saved some time there. CPXX, not so much, but let's talk about that because this is actually one of the trade arounds. Let me double click on CPXX, and you'll notice, I'm going to open this up a little bit for the intraday trade. You'll notice we have data points on our charts. And these data points give us a few quick indicators of where the trade is set and where it's traded to stop out and so on. So the arrow gives us a look at the actual candle. But if you'll notice on the right-hand side, 1558 here in blue, that's the actual entry price for this particular one, entry price, 1558. Okay, so all good. Quickly, we can use our eyeballs to say this is the candle, this is the entry, so we'll just cover up our crosshairs. And this is roughly our short entry right here on the Holly, on this particular short strategy, bond shorty, which came into the day with, well, pretty good 61.4%. Well, in this particular case, Holly was stopped out, but it was it's still a good trade. Statistically, this was still the trade that was supposed to work, but there was just too much of a tight of a stop, and Holly did her job by getting out and managing risk accordingly. But again, this is a gray box indicator. Just like every other indicator we have in Scanner, this is generating trade ideas to you in real time. The only difference is we actually know what the score or win percentage is on these things as they were back tested the evening prior. So we look at this as just another awesome trading idea generation system, but has a lot of special sauce and a lot of statistical probabilities behind it versus our regular trop lists and alerts. So getting back to this particular trade around, Holly was stopped out here at 1605. Right where that red thing is. Well, you can see, oh so close, but stopped out nonetheless. So a real simple rule of thumb that we've been using, especially in the trading room with Barry on these particular trade arounds is, let's keep an eye on this one. Statistically, there was a reason that this popped up, but we just got out a little too soon. So one of the easier ways to maybe reassess a re-entry in this trade would simply be go back to the original entry, which is 1558, and go ahead and create yourself a, it doesn't matter which direction, but we just call it short because that was the direction of the trade. We'll call this Holly trade around. So we know if this thing pops back up midday, which it did, it's giving you a chance to additionally take a second crack at a Holly trade 2.0. And so that trade would have triggered, again, chopped around about the entry point, but then towards the end of the day, giving you a profitable trade. So again, this is an idea generation, bringing trades to you in real time, but it really is up to the individual trader if they want to continue to hold the trade or if they don't. But a good rule of thumb for me, again, is the time stop. If a time stop goes out and Holly is getting out because the time shot clock is expiring, but you look at the chart and that thing's making a 4-day high and it's pushing new highs as Holly's getting out because the shot clock is expiring, it's probably not the best idea to follow her. It's up to you. It's your discretion. But I'm just saying those might be the ones where you can try and look to get a little bit more meat on the bone and use your own trader's discretion at that time. All right. The other trade around that I had set up today was this CI, and this is a little different look. This was a time, additionally a time stop, so we're talking in the same vein of maybe putting in a secondary trigger on the same day for Holly. But let's take a look here at the numbers again. This was supposed to be a long trade in CI. The long was issued right here on this particular candle at this particular price, 132.25. And we were stopped out rather quickly. However, we could have come back had you wanted to. We don't know how this was going to turn out, but chance favors the prepared mind. Why not give yourself a little preparation, create a price alert for that at that level, and then if the price did come back up through that level, it gives you a secondary opportunity to consider a secondary trade in the original position that Holly identified as a good entry setup here. However, didn't work. So no harm, no foul. At least you're giving yourself some opportunity to react if it did trigger, but in this case it didn't. So again, a real quiet day in Holly, but we are just happy as heck to see the performance that she has been giving relative to the S&P recently. And speaking of Holly, like Scott did mention, for those of you that are on the fence, we do have a big event coming up here, and you have a decision to make if you were thinking about buying the AI, which includes the back testing, and most importantly, in my opinion, aside from the AI, of course, is these price alerts. Because these price alerts, especially for the newer traders, can be some of the best feedback devices to let you know what's working. So here is my current price list price alerts working for May, and as you can see, there's not much going on. It's been pretty choppy. What was working last month and the month before is not so much working this month. And again, in context of theme of the day, change is the only constant, we can't continue to try and beat our head against a rock when we're showing this P&L of what was working last month not working. So what I've been doing is I've been trying to add in a few more shorts, mix it up a little bit, and see if I can get that P&L to increase on this, and we'll do so going forward. But again, the AI is going to be going away if you were looking to put a ring on Holly's finger and lock her up forever. That is no longer going to be an option. We've had an overwhelming request and response for people who want to use a monthly subscription way of accessing all of the premium features, which again, Holly, the AI, the price alert feature, and our back testing. So when I'm finished here, Scott is going to come on and give you a good lay of the land as to what's coming up here real soon. And for those of you that again that are on the fence, you guys need to figure out, is it in your best interest to just go ahead and go for the lifetime license, or do you want to stick around and see what Jay's bringing down on the aisle? That's a really, really old joke. I'm sorry about that for those of you millennials that understand that. Let's make a deal. Program from the 70s. Shows how old I am. All right, so where are we here? We've done Holly's recap. We again talked about a little bit of preview of what's going to happen with the Holly pricing going forward. Let's get into the trade of the week. Now, for those of you that got into the trade of the week, it is still intact. It is CLNE, excuse me, Clean Energy, the T. Boone Pickens company that deals in natural gas and creates natural gas facilities for buses, trucks, and hopefully someday cars. The earnings date is behind us, and that was one of the catalysts of picking this particular trade. You can see it's got that trend change lubricant look that we've talked a lot about, a stock that's in its downtrend but trying to build higher lows and move through a pivot level. This level here was the day after earnings, and the earnings were very impressive. I try not to get too caught up on fundamentals. I'm more of a chart reader and looking at the footprints in the sand. However, CLNE seems to be changing course. There's a lot of good metrics in their earnings, and it showed so with this green candle spiking up and closing on highs. So we decided that this was one that needed to get out early. So this week you may have noticed the trade of the week did come out pre-market. So we gave everybody a chance to assess the open, which was this red candle here. So we had a bit of a trading range on that day. But what I really like about all three of these days here is look at the wicks on the downside. Let me zoom in a little bit. Don't mind the military jet flying by here at Miramar while I'm speaking. Nice wick. I always like to see if you're bullish. You know, Barry talks about these too, a lot of bottoming wicks and topping tails and bottom tails. It's always nice to see these bottoming tails where the market, where the stock actually recovers towards the end of the day and has some buoyancy to it. When I see these wicks, I see buoyancy. So, you know, when we first saw this trade to come out, we saw a really nice candle with some really nice fundamental earnings behind it. But when you look in the bigger scheme of things, look at where the stock's been. All right, you know, this thing's been, you know, it was recently as $13 last year. It's been beaten up, but the price stop level price was put down here just below this wick right here. And then when I zoom in on this chart, it may look like a lot, but in theory, it's really not. So we try to remind you all, first step is to take a look at the stop price, then calculate your shares based on what that equation would equate to a total loss if the stop loss did trigger. You know, it's the same mentality as using options. When you're buying on options, you know, you're buying a couple of contracts, you plop down $500. Theoretically, that should be your biggest risk is $500. Well, we try and do the same thing here by identifying the downside risk of the stop level, then calculating the amount of shares to equal your biggest risk tolerance for a losing trade. But again, you know, this was not a real tight entry. We left the entry on the open, so those of you that did decide to take the trade could have gotten this entry anywhere from the open down to the bottom end of this wick in this general area. But again, I highlight this just to remind you, in the bigger scheme of things, it's really not that much to try and look for a move that's going to move higher. And I will say I'm feeling really good about this one, the way it's been holding up. It has not given back any of this green bar. Maybe a little bit intraday, but like I said, the buyers step back in, push this thing up for a nice close. You know, today we had some weakness in the market, but we actually have a green candle doji here on CLNE. And I've seen this pattern before, and I like what I'm seeing. You know, higher lows, higher lows. It's not pulling back in price. If anything, it's trying to go sideways a little bit. But I, you know, foresee if things work out well, you know, I foresee this thing moving higher off of these levels. And then when they're moving higher, the first thing we need to do is look left. First level of resistance is going to be 347. Hopefully that comes into play. And then we've got another wick here, 354. So all in all, this area in general will probably be very similar in supply coming for sale. So this level and then the level up here at 376 are the two near-term levels that I see giving the CLNE trouble. And if we're going to continue to trade like we have been off of this nice green bar with no give back whatsoever, then I still feel really good about this trade and this trade moving higher. So if you wanted to be aggressive, not aggressive I should say, if you wanted to be conservative, you could lighten up your stop a little bit since we have survived these last 3 days with no give back on this big green candle bar here. You know, you could probably raise your stop down here to below 303. What's the low there? The low is 304. For those of you that haven't heard my sermon on HFT and their stop hunts, if you're going to go 303, a penny below, it's very, very, very likely that you may get stopped out on an opening drive down. And why do I say in the open? Well, let's just take a look here because, once again, this just buttresses my argument that HFT goes stop hunting on the open. Here's the open 2 days ago. And a big red bar down on the first 15 minutes and then recovered. There's our wick that we looked at. Well, here's today. Kind of a smaller washout, but an attempt to wash it out to the downside today on that first 15 minute. That's why I affectionately call the first 15 minutes the come out roll. You know, like in craps, you all have to survive that first roll. If you get a 1 or a 2 or 12, you're out. Or if you get a 7 or 11, you're out. It just depends on what side of the come line you're on. But I affectionately call this surviving the come out roll on the open because it seems to be where all the stop hunts are going on. So in that vein, if you were thinking about putting a stop in and raising the stop below this bar, 304, 303, you're probably just asking for it, in my opinion. You're always better off, in my opinion, to maybe give a little bit of slop in there. Maybe go 299, 290 in the hopes that the people who have their stops up there at 302 and 303 tucked just below that obvious level, you know, if they get picked off and reversed on the come out roll on the open, well, you're still smiling and surviving down here because you gave just a little bit more wiggle room for the stops. So the sermon here, in my mind, is always try and give a little bit more wiggle room on these stops to avoid those opening come out rolls that the algos seem to want to do on a stop hunt. All right, so that's the trade of the week. Where to from here? Well, I wanted to remind people that we have some channels, and one of these channels here is the sector channel, this green one. I'm not going to go into it because I hate going back and forth, but what I do is when I find things on a channel that I like, I borrow it and I take it for my own. So on my minimized list here, I do have the sector heat map. And I know Barry does a great job of this as well, reminding people in the first 15, 20 minutes of the open every day, use this to your advantage to find out where the winds are blowing and where the currents are. It would have been nice to know today if you were coming in trying to short some gold stocks at 9:45 or 10 o'clock Eastern that you probably would be paddling your canoe upstream by doing that because the gold index was the winner of the day, and likewise biotech was the big loser of the day. So it never really hurts to have this handy, and if you haven't done this, I highly recommend going to our sector channel and using the cloud. You know, right-click on that cloud and save it, and then go back to your default layout and bring it down. It's a big window. I try not to look at it all day long, but in the first half hour of the market, it really does help to glance at this thing a few times to stick your finger in the air and get a feel and a sense for where the winds are blowing. We're going to come back to this because I want to go into the gold channel a little bit later and see if we can find any decent setups, because I've been looking at the charts and gold is really doing well on the daily charts. They seem to be really holding up well. As a matter of fact, RGLD was a trade of the week. I think it was 4 weeks ago, and is still intact. The RGLD trade was basically this right here. Was never stopped out, so we continue to kind of make higher highs and higher lows. GDX as its parent looks very similar. And that reminds me, you can click into the sector window and get a quick look at what visually these sectors are looking like. So like I just showed you, the GDX looks very similar to this gold bugs index. Natural gas charts basically are looking like that. They could be putting in a higher low and moving higher. That's kind of a level of interest. And then on the downside, we can look at the biotech and see what happened over there. Oh, yep. Biotech's had a horrible fall. They tried to dig in here. Nice green candle on Monday, but that was pretty much all erased and rolled over. So the biotech is starting to look a little ugly here. But you can use this sector analysis, double click into it, and get some nice nice daily charts to see what it is the whole sector looks like. But we'll come back to some gold setups. I think it's time to go through now and start doing some homework and seeing if we can find some good alerts to set up. All right, I'm going to start with an observation. Again, the winds of change might be here, guys. If you recall, this trend change lubricant window is usually chock full of good ideas and has been so for a few months now. But it's no longer spitting out decent ideas. It's only got 3 here on the board as of the close today. And I was watching during the day, and there was never really more than 5 or 6. I did create the flipped version of the trend change lubricant, which I think I demonstrated last week and how we did that. But we've got a few interesting ones on here as well. So let's start with these 2 windows, and I will expand my daily chart so we can all get a real good feel as to what we're looking for here, and set some price alerts. All right, here's the daily chart. So let's start with this first one, OILI. Well, I kind of like this one. A couple of reasons. We do have a void down here, and this could be a gravitational pull to go into the void. As you can see, we had a big wick up last 2 weeks ago, and it's been kind of downtrending ever since. So this is the exact opposite of the trend change lubricant, because this is looking for stocks that are in the upper range of their daily window charts, but are starting to make fresh new 20-day lows. And so I kind of like this one because this right here seemed to be the trigger point. That low and that low. Now, when I see these particular types of setups, what I don't want to see is a big wick down and a wick back up, which shows me that it tried to make a move but was reversed. But when I see a red candle here like such with no wick and closing very much close to its lows, I feel like there still could be some hidden possibility alpha in there that was not rejected yet, and it very well could go down and be rejected, but it hasn't done so yet. So 2 things I like about this one is the void gap down here. I feel like this wants to come down and maybe test these levels down here around 22.99 or 23ish. So let's go ahead and set an alert on this one just below the low. We want to trigger a, let's see, 24.50. So let's go ahead and go 24.49. I'll adjust that, 49, and it is set for a short, so that's correct. I found this on the trend change. I try to give my idea of where I found this stock. When it comes to me in real time, I'm more prepared. Not type today. Trend change flip. That's my reasoning for this one. Let's go ahead and set that. And as usual, the red dotted lines appear, letting us know it is a waiting. It has not been triggered. It is currently working. And I'm thinking more likely than not, this thing may trigger on the opening bell tomorrow, may even gap down through there, but still can bring to our attention a good trade opportunity. And again, simplify the method. It's not a system, it's a method. And again, in keeping with today's theme, methods work until they don't work. And so we always have to be looking for new ways to try and create alpha and look for that next good method rather than going back to that same well that is not working anymore, but beating it up regardless just because it worked at one point. And it may work again, but for right now, that trend change lubricant, these are just not spitting out and they're not working as well. So I'm going to try and look for something a little bit different, create some more shorts, use the same philosophy, but just flip this thing upside down. All right, SRG is next. Also kind of interesting. I don't see a void or a gap that it's shooting for. However, I think we could do better. We've had a couple of good long red candles here. If anything, you could possibly set this for maybe a bounce back up at the levels at which it broke down from and catch that. But it's okay, just nothing really compelling. Let's move on here. Definitely not compelling, just too much red. This thing's already had its move. It's already played through the gap. It's already filled its void. Nothing of interest there. Let me pull out a little bit and see where we are. You know, again, this could be interesting, but it seems like every time it gets down to these levels, it seems to find buyers and bounce back up. I'm looking for that one move that's had a really nice extended move and ready to give something back. Again, just kind of slowly trending lower, and it's probably going to find some support down on this level of congestion. Nothing really compelling there. I kind of like this one because we talk a lot about the flipped version of this, where you have a stock that's just basing, and then tries to go up through its support. Well, the opposite here is kind of consolidating. So we've got a nice little narrow range that looks like it was barely breached this morning, but a slight wick sucking it back up. I kind of like this one, and I think this one is worthy. So we're going to go just below the low of today's wick and see if we can catch some follow through there. That low is 1163. So we'll go 1162. I'm sorry, that's incorrect. 1148. So we'll go 1147. Price alert. It's already coded for a short. And again, trend change, flipped alert. So if this comes up to me in real time and the market's ripping to highs, well, that's something I need to consider. Do I want to go short when the market's ripping at highs? So all we're doing is just creating possibilities of opportunities to push to us in real time so that we can evaluate what else is going on. Obviously, it would help to know, what type of, sector this thing is in, and marry it up to our sector analysis to make sure that, if this is a REIT or a real estate, company, it'd be nice to know if the REITs and the real estate companies were weak on the day and the currents are behind our back. So that would be that for the flipped trend change. Let's take a look at the downside trend change that we've been looking at mostly. Taser, again, the same old thing. It's approaching its inflection point here. We see kind of a level of interest going all the way back to here, 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 and here. And it broke through today, but it did so after 4 days of expending a lot of energy and crossing the finish line. Where's it going to go now? It's probably just going to suck back down in and gather some strength and steam and try and create some more potential energy. So this one kind of, shot its wad, for lack of a better word. It's just nothing really of interest there. I would have rather seen a few less green days expending energy getting up to that level. So not interested in that. Oh, well, speak of the devil. Kind of what I was just asking for. Here's a lot of congestion. Here is an interesting level that we broke through today and closed on highs. Not only that, we look back here, we have some congestion here and here, here. So we have a bona fide level of interest, a pivot level here. And it looks like, this thing, had it been set earlier, we could have got a little earlier warning, but there's still possibility of some more run tomorrow. So I'm going to use this one for a long setup to throw into the mix. And we got a high of 4209, so we'll go 4210 and create a long alert at 4210 from the trend change up. Again, chance favors the prepared mind. The more I can prepare myself for when these things trigger and the more I know about what I liked about it at the moment, the better. And remind myself, good consolidation here. So that's the reason I might like that one. Baxter, well, great stock if you were in down here, but these are the kind of ones when they break, as they say, these stocks, they take the stairs up and they take the elevator down. So I could see this thing giving back 1/3 of its gains in maybe 1 or 2 days. It's never fun when they pull the rug on you on these stocks when you're just like inching out on a tree limb, wondering when the musical chairs are going to end and if you're going to be able to find a chair. So nothing really compelling there. Let's take a look at a couple of others. I've actually skimmed through this Holly's Much Watch list, and I like this one, Skull Candy, because what I did on this top list is, there's a bunch of different looks on here, but I sorted it looking for the lower floating stocks, the stocks that have a lower float. This one only has 14 million shares in the float. So in theory, it doesn't take much to get these things moving as opposed to a stock that might have 500 million shares in the float. So what do I like about this one? It looks eerily familiar to clean energy, doesn't it? I mean, it had a really nice move, but it's tried to pull back a couple times here in price and just couldn't, got rejected. The buyers are pushing it back up. Same thing here again today. Buyers are pushing it back up. So I'm going to go ahead and set an alert on the high of today because it kind of has a good correlation to this point right here and the initial gap down point. This is kind of an interesting level of inflection that it seems to be trying to chew through. So just simply using the high of today, 380, we'll go 381, and we're going to remind ourselves low floater, because I may not know that when this thing comes up. And this is the reason, one of the reasons I'm selecting a low floater and looks like CLNE setup. So giving myself a few ideas here as to why I might like this if it comes to me in real time in the future. So we'll go ahead and set that one as well. And that one is set. All right. There was one more that I had, and I can't recall where I found it, so I'll just go ahead and type it in. I think it was YPF. Let's take a look here. And again, I can't recall where I saw it. It may have just been scribbled down during the day before it fell off one of the lists. But again, pretty obvious level here of interest. Going back to those prior highs, we've got prior highs here, and then it bounced off those highs here. Well, this one is expending a little bit of energy getting to it, so I might have to put a bit of a caveat on this one, but still, I'd like to know if it breaks this high of this day, which is 2098, so we'll just go 2099. And I'll call that a long trade. And I'm going to give myself a note here. Would really like to see more consolidation under the trigger level. And what do I mean by that? I mean, it was some good consolidation down here, but we expended a little bit of energy getting up here. It might be nice to see a little bit more consolidation, maybe build a cup and handle before it does decide to break through. But we'll make that decision in real time when the trade comes to us. And so that trade has now been set active. All right, what am I trying to do with my chart here? Okay, I want to bring in a couple of other alerts. And I think I introduced these alerts last week, the bullish engulfing and the bearish engulfing. Where's my bearish engulfing? There we go. And again, the bearish engulfing was just a simple flipped version of the bullish engulfing, much like I did the flipped version of the trend change lubricant to come up with the flipped version upside down. Well, this is looking for stocks. We'll start with the bullish engulfing. This is looking for stocks that's down and beaten up pretty good. I think it has to have a minimum of 3 days down. And then we have to have a green candle covering it up, trying to move higher. And as you can see, I actually got a bit of a head start on this one. This one was already set midday by me, and it's triggered, and it's barely in the money. So we'll consider this one one of the ones set as well. Well, no, let's not do that. That's not fair. Let's show you how we can manipulate these. I have to turn off my crosshairs for the time being. Now I can grab this alert, and I can pull it back up to just above the high of today's candle and let it go, and look, it turned red. So what it essentially did was it took the price alert, and changed it from working, triggered to working. So if we go ahead and just filter for our workings, we have, where did it go here? Maybe, let me look for it there. EFOI. Why am I missing? Oh, here it is. Thank you. It went back to working. So I had it labeled as my 4-day bounce off of my bullish engulfing. I reset it today as the same working alert. I mean, it was only a few cents in the money, but still the same idea. But I also demonstrated to you there how we can actually adjust these things on the fly. And since it was triggered and moved back above the trigger point, it switched back to working. All right. So that is one that I do like, and as a matter of fact, it's the only one that came here on the bullish engulfing. So again, kind of a caution flag raised there. I'm not seeing a whole lot of bullish setups, but I am seeing a lot more bearish setups. So again, these are just little small cues that I'm starting to pay attention to, that I'm noticing a change the change in my my price alerts, not as healthy as they were last month when everything was working a lot better. That was the first alert. Second alert here is the trend change lubricant is not spitting out a lot of good stuff, but we're starting to see some stuff follow through here on the downside. And same with this one. Only one stock here on the bullish engulfing, where I had a lot last week, but a few more to choose from on the downside. So let's look at the downside and see if we can find some alerts. Well, here we go again. I found this one earlier. As you can see, this one was triggered, and the reason I liked it is it was getting close to lows. Let's talk a little bit about the ones I like. I really, really like this one because it's not in congestion. It broke way out of congestion. 1, 2, 3, 4, 5 days up roughly, if you consider that day, and then it's got to have some give back here. If I saw a big tail on this red candle bouncing down to like 47.50 and then bouncing, sucking right back up into the close, I would not be interested in this. It did not do what I expected to do. But once again, we've got a red body candle here with hardly any wick on it that closed very close to its lows. There could be some more meat on this bone. So let's just go ahead and do the same drill that I did for you a second ago. I will adjust this price alert down to something that is for everybody to trigger on tomorrow, low of 48.25. So let's go ahead and grab this and take it to 48.24. Well, I can go back into my price alerts. Trying to grab it just perfectly. It's really hard to do. We'll just leave it at 23. So again, this is still a decent setup. We've got a nice green candle, totally covered up almost by this red candle with no wick to the downside. So hopefully looking for some possible follow through tomorrow on this. And this is now back to working as an active short setup. Let's go through here. Nope, that's that tail I talked about, not in play. Like the topping tail, really nice. And look, I do have an alert already set on this one, W wave. So let's include this into the mix and put this just below the low of today, right there. We'll keep that one as one of our working alerts. This is a bit too much of a down tail for me. We showed too much recovery here after a big, strong gap up, so not interested in that one. I do kind of like this one. 3 really nice topping tails, all showing you reversals here above these levels. Not a very big tail here down below, so there could be some more meat on this bone. What's the low of this candle is 1737, so let's just go, let me put my crosshairs back on, which I really like. 1737, so let's go 1736, right there, price alert, coded for a short. Remind myself where I saw this. Not much wick to the downside. All right, MORL. Well, very similar, but we could throw an alert on that one too because it also has the low of this day. Let's go ahead and use the low of this day, which is 1404. So we'll go price alert 1403. Krispy Kreme. All right, here's a good example of what not to do. Krispy Kreme, if you were not aware, was purchased and bought out. So when you see a gap up like this in a very narrow trading range, yeah, it showed up on my filter, but you got to recognize this is arbitrage going on until the stock is absorbed by the parent company that bought it. So more than likely, it's just going to continue to do this very flat lining for ages. Nothing there. Nothing there. Didn't have enough of a move up. Still kind of rangy here, if you ask me. And CCI, decent. I like this one too. A couple of nice topping tails. 1, 2, 3, 4, 5 days of up movement. Very low wick here. Let's use the low of today's wick, 91.18. We'll go 91. I'm sorry, the low is 90.01, so we'll go 90, right on the button. All right. And a couple more here. Oh boy. I do like that one too. I mean, I'm seeing some setups that I like. Whether or not they're going to work, we'll find out. My price alerts are going to tell me a few days from now. Next time we meet, we'll find out. But I'm trying to get a little bit more exposure here in the price alerts to the downside to see if they are, in fact, in the middle of some changes here. So again, I really like this one. Not a whole lot of wick to the upside, but a nice red body candle. So I'm going to take the low of today's low and we'll set an alert there as well. It's going to have to be right at 50. 50.01 is the low. So we'll call this 50. And just two more here on this particular setup. No, don't like that at all. It's just completely rangy and wicky. Nothing going on there. Yeah, you could probably say something for this, although we had some nice consolidation here. I would have rather seen it run with one or two candles straight up and then back. So because of this consolidation here, I feel like the buyers could step back in easily. There is a nice void here to look at, but I would have rather seen this void not so much with the consolidation above it. And so that's the gist of the short side. Now, I did promise, as I said, I saw some interesting stuff coming through in the gold sector. So let's see if we can maybe find a couple of longs in the gold sector. Now, look no further. We've got a gold sector channel, basically called the metals, with a lot of it's going to have gold in it. So we can go to our metals channel, and we can set some price alerts here. Just quickly look at some of these gold names that I see here, and see if anything makes sense to the upside. A lot of these are probably going to look very similar in nature with how the gold has been lately. IA Gold. Let's see. Oh, that's my 5-minute chart. So they've got it backwards on the channel. I like to have my daily chart up on the left. Okay, well, again, the power of gold. This is where the market or the money is flowing to the upside. If you wanted to be a momentum type player, you could try and buy a breakout, but that's not my style, and a lot of times those breakouts can be head faked. There could be a case to be made for a nice trend line where we could put maybe some pullback alerts on there, but that's just a thought. Let's see what else we got here. All right, I kind of like this one. Even though it's not a gold stock, it's Freeport-McMoRan. It's not a gold stock, but it is building higher highs and higher lows, as you could see. This got ahead of itself and really punished those people that chased it up here, which is one of the reasons on that last chart. I don't like to chase these things. I'd rather see it pull back, reset, build a new base camp, and try and work higher. So you could make a case if this candle here was taken out to the upside. There could be some follow through, and over the course of the next few weeks, we could maybe make an assault on this. So let's go ahead and add this to the mix. I kind of like this setup high of 1194, so we'll go to 1195 and try and set up a couple of long plays. Higher low, I like. God, I cannot type today. Here's a silver stock. I think gold and silver are kind of moving together, but we've got a lot of back and forth ranginess here. Not seeing a whole lot on that one. SSRI is also an interesting silver play. Well, this one's kind of interesting. It is flagging. If I were to draw, and let's just go ahead and do that real quick. Why not? I'll show you the thinking. Let's get rid of the crosshairs, and we'll go to a trend line. We'll grab this trend line, and I'll show you what I'm seeing here on this particular one. Seeing kind of a wedge, or kind of a flag as they call it, these bull flags, kind of a declining top tail. So in this case, I actually might be interested in a price above today's wick. So that's the theory on this one. It's kind of a bullish wedge, however you want to call it. Good support down here of buying, but kind of a little mini trend lines, for lack of a better word, is what you call it. So if we can break above this little mini flag line, I'd like to know about it. The high is 904. We'll go 905. Drop it in there. Bull flag is my reasoning. Make sure that if this thing does trigger, that gold and silver are having a good day and everything else is in line. So we'll set that. This one, why did it already trigger? All right, maybe I set it too low, or maybe it's moving higher after hours. Let's check that. Let me move it up just a skosh, and it's still triggering. So this one must be moving higher after hours. Let's go ahead and take this one off because I'm not exactly sure why it's doing that. I'm going to delete that price alert, highlight it, and click it OK. That price alert is now gone. It's moving on. Well, similar type of fashion here in Coeur d'Alene silver. It's had a very nice uptrend. If it did break this downtrend, there could be something to be said there. I'll go ahead and not set that one. Well, EGO, great move off of this higher low, but again, I'm not going to chase something like that. But this might be a great example as our last alert that we're going to set here as to how we can maybe catch this on a pullback. What would make sense if I put my crosshairs back on for a possible pullback alert to this one? Let's just take a big look here and see if we can find a level of interest that might pull back. Well, there was some good support back here, and here, and here, and here, which kind of runs right through that area. Where was I? Right about there. Looking at the very longer term picture, I'm focusing on this little hitch and these wicks back here as an area of interest. So I'm going to just go ahead and, this is eyeballing it for sure. It's not to the penny, but I'm going to remind myself, as always, pullback alert, watch the price action carefully, because these are not black and white. They can slop around a little bit, but they give you a good area of interest for a possible pullback. So if we zoom back in here, we're essentially keeping this portion of the move, but maybe anticipating a higher low building its base in the next coming week or so at this level. So there's an example of a pullback price alert. So, that is the gist of trying to use trade ideas, the Holly Trinity of the AI trade arounds, the top lists, the channels, to bring forth the stock symbols to us using the charts as the second, to try and find out where the patterns are going, where the footprints in the sand, what the herd is thinking, and then third, using that price alert feature and function to bring these to us in real time, to try and make this as simple as possible and start feeding ourselves residual stock ideas, trading ideas in real time, rather than chasing our tail and looking for trades in real time. Better to have these things come to us with our notes as to why we preferred and why we created that setup. So let me go back to my regular layout here, which is my default layout. And as promised, let's go in and grab the price alerts that were set today. And the ones that were set today, if we just double-click the created channel, we can see these were all the ones that were set here on 5/11. I'll go ahead and give all of those because some of those were set earlier in the day. Only one of them is triggered, but the rest of these are working. So I'm going to highlight that from this morning all the way through the alerts that we have set this evening. And this is just the most genius part of this new feature, is the collaboration. Whoops, I didn't mean to do that. Is the collaboration feature. So I've got 16 alerts here. We're trying to find the winds of change and see if we can figure out how to adapt to what's starting to work, because what was working last week, last month, is not working as well these days. So this is the drill, to try and be adaptive to change and not sit around waiting for somebody to bring your cheese back. You got to go out and find your cheese. So we're going to share these alerts. I'm going to copy them to my clipboard. And now I'm going to go into the chat window, which you all should be able to have access to. On the toolbar is a chat window you can expand. And I just popped in the entire collaboration of all of those working trade alerts. So that's all I've got. Thanks a lot, Jamie, for manning the question box there. I see some questions were getting answered. And I'll just turn it back over here to Scott, who can really try and explain in detail the changes that are coming up. And for those of you who are on the fence thinking about Holly, you've got a decision to make here pretty quick. Scott?
Yeah, thanks.
Hey, Scott, I hate to butt in here, but real quick, Steve, if you wouldn't mind dropping your bullish and bearish engulfing windows into the chat room or into the chat area so that people can have those cloud links as well.
Thank you. Never a problem for you butting in, Jamie, because it's always something important. I'll be happy to do that. While Scott talks to you, I'll drop in the bullish and bearish engulfing that we set a lot of bearish engulfing alerts on. So, yeah, why wouldn't you want to have it? All right, Scott. Sorry about that.
Let's pop it on slide 9, and I'll explain where we're at right now with the prices and where we're headed.
Okay, I'll move these over so I can work on those while you talk.
So we're a software as a service company, and our core is our subscription. And the basic subscription is $99 a month. And it is no contract, cancel at any time. It includes all your real-time data and exchange fees, our charting. Very importantly, it also includes an hour of one-on-one training with either Steve or Jamie, sometimes Brad. And the first thing you should do as soon as you get a subscription is go directly to the support page, click on training, and sign up for the training. It'll help you figure out how to do the layouts, get set up for your style of trading the fastest way possible. Now the annual plan's only $888 a year, and that obviously saves you quite a bundle over the $99 a month. And now we get to the AI channel. To get access to Holly and the Odds Maker, our backtesting tool and all of that, is a one-time $1,100 purchase. And, well, what that does, it gives you a lifetime license. All you need to do to go along with that is the data. So pick up a monthly or an annual subscription along with the AI license, and then you have that AI license as long as you have an active subscription. It also gives you access to the price limit alerts and the backtesting tool, the Odds Maker. So you can also optimize your own strategies without programming, in addition to consulting Holly. So we're going to have a change coming up in at the end of May or the first week of June, and I've got a sample of what the pricing change is going to look like up on the screen now. So we're shifting away from having that lifetime license for the AI, and we're going to go to a basic TI and a premium TI. The basic TI is exactly the same as we talked about already. It's a $99 a month or $888 per year. We're moving into for the AI and access to the odds maker and the price alerts is $188 per month or $1888 a year. So if you already have a subscription before we do this price change, you're going to be grandfathered in and be able to purchase the lifetime AI for $1,100. But new people signing up with new subscriptions are going to have these four options. They can either choose the basic or the premium, and with or without the AI. So it simplifies everything. It's going to be a lot cleaner to explain. However, it is going to be more expensive in the long run, which brings us to the point that this makes it a great time to come on board this month. We have a code for today, and that's on the next slide. It's Holly11, and that is all caps. It is case sensitive, so consider that. Now, this code expires at the end of business on Friday. You get to save half off your first month, so try us for $49. Get that training in. Really no reason not to try us at that. And then upgrade to the yearly. If you're already a monthly subscriber, it's a great time to use that code. Save 20% off the first year. Get it for $710. Or you can save 30% off that lifetime AI odds maker license that's going to go away at the end of this month or first week of June. We're simply waiting on development to finish some of the back office changes for our subscriber database and the way the billing happens. Here's the best thing, though. If you go to actually, let me have you do something. Go to your handouts panel on your GoToWebinar interface. Everyone can have a download of a PDF that has some of this information also. I forgot to point that out to you. Again, you can just look at the handouts panel on your GoToWebinar interface and you can download that PDF. Now, if we move to the next slide, this is a really great deal. You can go to this bit.ly link and it takes you directly to a page where you can click through to buy both the year and the odds maker AI license at the same time together. Now that's normally $1988, but with that code Holly11 through Friday, you can save $508 immediately and just have it for the year and then renewing at $888, but the purchase is $1480 for the first year, including the lifetime odds maker license. Again, renewing at $888, and that's yearly as compared to what the TI premium is going to be for the annual. In June, it's going to be $1888 a year. So this is a great time to get on. The AI is kicking ass, and if you have any questions, email us, info@trade-ideas.com. You can reach Steve at Trade Ideas. Jamie is jhodge@Trade Ideas. Thank you all for attending. Follow us on Twitter and Facebook. Have a wonderful evening. Steve, good presentation. The audience loved it. Thank you. Jamie, thanks for helping out.
Thanks, everybody.
Yeah. There'll be a recording up later. You'll get an email when it's up and a little reminder about that promo code and the price change. All right, guys. Thank you.
Thank you. See you next time.
Bye.